Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today's Wednesday, November the 26th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Today, in terms of news, we have a pretty full docket for it to be essentially a holiday week. We have durable goods, the delayed version, and then it looks like we have a new version of durable goods, and then GDP, international trade in goods, jobless claims, Chicago PMI, personal income and outlays. We have a lot of potentially market-moving numbers, but, we'll see. We'll see what happens in terms of what is going on. That's a very newsy day for a holiday week. So starting at the 4-hour chart, we can see that we are in a broadening wedge with retail traders still holding this trend line. I'm going to put a 4-hour trend line here so that we can see that the movement is really steep, right? We've got really steep motion. If we want to add this second link that has a bottom on November the 24th, we could draw a couple of things. We could draw one that's wider. We could draw one where we just connect to the bodies, the closed bodies. So this is the main reason that I say I do not like trading with trend lines, because you can really make an argument for the reason that you can do touches, or how many touches, or how many touches make it more valid, or it doesn't matter. I can draw anything to amplify what it is that I am thinking. So that's why I say, hey, let's just look at horizontal lines and see if we can see some clarity. All right, let's go to our 30-minute. And we'll notice in the overnight, we've had the same sort of sideways pressure that we've had for several days. Same thing, sideways, comes into the moving average, accelerates into the opening range. Yesterday, I said the same thing, accelerates to the opening range. We had a little bit of flatlining here. And then in the overnight last night, we had a little bit more upward acceleration than we normally have, because you can see that VWAP being slightly upturning, but that concavity is something to pay attention to, right? So concavity means that it's an arcing down. Convexity means it's an arcing up. So when this begins to arc down, your thought is, let me make sure that what's happening above I pay attention to. Now, the backdrop is the dips are buys, and reversion to the trend line has created buying opportunities. Is that the truth still here? Yes, of course it is. Could we have some news events that make it a little shaky? Yes, of course there is. Here's the next thing. We've got the gamma line, right? We have the call wall at 68.50. We have the 0 DTE call wall below us at 67.70. So what the traders are going to try and do when the call wall is sitting in a space like this, they're going to try to push price down into a region near the call wall, pull that position off and rotate it up, while at the same time selling down sharply enough to collect a premium that's going to make it okay for them to move back to the upside. So that's what I suspect. Some sort of dip and then a rise. And we have a lot of data coming out in about 30 minutes. So that's what we're seeing. Call wall, 67.70. Congestion zones down to 67.50. The anchored VWAP from yesterday, 67.40-ish. The point of control, the value area high, both sitting at 67.26. What's that telling us? Well, thin volume action well outside of the value areas. And so, just for grins, let's do a Fibonacci on value area high to value area low. and see if we have some convergence. So what do you know? See, here is the 50% marker of the expansion. So it went up half the size of the value area, and now it's coming back. So pullbacks into the region near 67.50, 67.40. It's all fine and dandy. You expect price action to bounce from there. If it doesn't, we've got a problem. We've got downside pressure. Okay? All right. The 0DTE put wall, 66.75, and the general put wall is 6,500. So they are expecting price to sort of reflexively move itself down back into the pocket. We are in the middle of contract rolls, meaning we're moving to the next contract. And so we're going to see a shift in volume where it's divided between the current contract here and the futures. The future contract expiring in March, I believe. Okay, so let's get to the NQ. Take a quick peek at the 4-hour. We can see the deep broadening formation, right? We're making lower highs and lower lows, but in a very messy kind of way. And so, relatively speaking, we're sitting in a zone where a pullback could easily hold value area low, and that value area low is 24,500. But let's go to our 30-minute where our intraday formations are going to be built. And here's what we can see. We are above the call wall. The 0DTE call wall is 25,000. We've got a problem here. Traders on the back foot, not thinking about how much retail loves to just buy. Put support sitting above the call support. So, as long as we stay above the put support for the 0DTEs, those put sellers are going to buy. They're going to be in good space. We have to get below 25,100, looks like, for the call 0DTE call sellers to make money. And so only one of these guys is going to win at the current state. So what do they want to do? They want to bring price in as close to the call wall as they can. They're going to shift that 0DTE call wall intraday. They're going to buy it back and sell a further one out of the money and hope that price action stabilizes and they can keep it in between a range. So far, put sellers, and that is bullish position, they're winning. Okay, so what's next? Well, we have the big call wall, 25,400. Where's the big put wall? The put wall is down here at 24,800. What are we staring down right now? Looks like mean reversion. Old resistance. New support. Also that put wall event. Also close to the call wall event. So they're going to want to unwind those events when they can. Inventory in the overnight is bullish, right? They're long. And so what they want to do likely before the numbers pop out at 8:30 is unwind that so that they can sit in a space that's close to zero and then move forward again. The gamma line, gamma level 1 at this juncture is 25,000. That's an old call wall, if you recall. And so we could have those dips, but dips are buys under the current structure. Notice we could have ourselves a pretty solid wick, right? And that's what we saw yesterday. Huge wick down, great buying opportunity. I predicted the same sort of thing. Anybody remember Rosanna Dana? I predict. Oh, she was hilarious. Gotta love Gilda Radner. Anyways, side note. So I suspect that's what we're going to see. If we carry the range of this big motion, we clone it out, it could take us to very close to that call wall, which is at 25,400. Dips or buys? What's the best dip possible. The best dip possible is the pullback into the point of control. A gigantic wick event that just pulls us all the way back into old resistance / new support like it did yesterday. So where is that? Anywhere between that point of control at 24,900 and 24,980. That would be fantastic, actually, if we had a dip like that. So that's what we're staring down for the NQ. Let's take a look at micro Bitcoin. Bitcoin's still suffering, folks. Let me go take a look. Right, this is the largest. This is the last wave. 50% marker. We're still sitting underneath it. Spent all day yesterday trying to get ourselves out of this big pocket of noise. Still sitting here. Actually, you know what? Let's clone this one and see if we have a 1-to-1. Probably a little more than that, to be honest. Yep. And let's clone it one more time. Right? Look at that. That wick gave us 2 times this range. Man, you gotta love the markets. They are so fabulous. All right, so the line in the sand, easily value area low, which is 82,890. Value area high way above us. Trend still steeply negative. This looks like we're either basing or we're going to have another fade, another inventory liquidation here. Take a look at what's happened. Break of the trend line upward. This was sideways. This was sideways. And that break upward. All of these, as long as they sit and start moving, they break down, right? This one broke down. This one looks like it's breaking down. Let's do the next measured move to the downside again. And we're going to see, oh, look at that. My handy dandy 76,000 number. Yes, there it is. All right, so we'll see if it gets there. Okay, but that's what we've got. Bounces are sell zones in this environment, but they are trying to shift it somewhat with this sideways pressure. So you want to be pretty careful, right? Let me reiterate, a trend line is to help remind you what the relative trend is so you don't get your brain all crazy following the little wiggles on the moving averages. That's the goal. Let's take a look at oil. Oil looks a wreck, folks. I mean, that is really, look at that thing. This is definitely downward flow. I have a few spikes here. Yesterday, I said, we need to watch for the hold of the 6750. It lost it. It put the put walls down significantly. The call wall has drifted to 5950. The 0 DTE puts are down at 5650. Put support remains at 55. So what's the trade? Bounces or sell zones. Now we've got an EIA report today, so it could matter, but you can clearly see the positioning of the traders. They are selling into supply zones, right? They're selling into supply zones, and those continue to walk down. Value area, VWAP, all of those places way up at 60. Let's go to our 30-minute trading event and see the stair-step action. See how tight this volume pocket is? This is where they're sitting, right? They're trying to hold the lines near 6750, and they're breaking down. And so let's use this last wave. Let's use this wave, yes. You know what I forgot to tell you is that for the ES and the NQ, what they've done is recover the entire fade post-Nvidia. And that's super important. What I want to do on a side note, I'm going to look at Nvidia next very, very quickly. So we've got the put support. We know the bounces are sell zones. Wait for the edges to take your trade. If, per happenstance, we are building a ledge, it would not be unreasonable to try a long at around 67.40, 67.42, but your stop needs to be about 20 cents wide, right? So you want to be careful there. Let's quickly zip back and take a look at Nvidia. Let's go to the... All right, so here's what's interesting. The broad market has recovered, but Nvidia has not. Very important. See, this is the Nvidia spike. Up and then down. Okay. It confirms what I'm thinking, that they're rotating. They're trying to decrease their risk as traders and institutions. They're trying to reduce the risk of sitting in a stock that literally makes up, I don't know, 7% of the S&P or something like that. It's some huge number, right? 7% of 500 stocks. This one's holding most of that. So that's what we are staring down in this space. All right, let's go to gold. Gold is in rollover. So you're going to see these choppy spaces. And let me take a look at the Z contract really quickly. Yeah, I think we've rolled to the F contract. Let's see. Is it F? GC, gold futures. Is it this one? Crud sickles. Hang on, peeps. My apologies. F. There we go. F contract. Yes. We've rolled to the F contract, and we are sitting in a very tight region of congestion. As I mentioned, I believe that we are sitting in a broad congestion zone that will last more than a hot minute, is my thought, right? My suspicion is that's about where support is, and that is about where resistance is. So high 4250, low 4010, right? Of course we did dip below, and of course we still have trend. They're still buying these dips, but we also, I suspect, have made the highs for the year. Now, where am I going to be wrong? We're going to move up over 4,200, and then we're going to start coming after these monster candlesticks right up here. The next line in the sand would be 4,300. That's that resistance pocket. And then this double topping formation would be after that. But today, whatever spike comes after the news, we would see that largely dips or buys, right? We could say, hey, why don't I just try this one? Have it come back into this area. My thought would be, why not just look for old resistance and new support? That gives us $4,130. But we can see that really the traders tried to hold $4,140. And so sticky bits, folks. Sticky bits, very porous formations and quite a bit of indecision. I think it's important for us to consider overall what we're staring down here is a chart that is essentially very landlocked, and you're going to have some pretty nice opportunities for intraday trades that allow you to hold the floor at 4,160, 4,165, going to 4,190. It's going to make some good money for you. All right, let's finally take a look at SPY. SPY trending up, holding the ledge. This was the Nvidia runoff, and look at the difference between the broad index and Nvidia, right? We just saw that Nvidia chart. So there's a shift, right? And it's not only the SPY. You could go, hey, that's, we're in the Qs. Same thing. The Qs clearly not as strong as the SPY, and that's because there's a lot of rotation going on in there based on what the traders are trying to do. What are we looking at? Dips or buys? We're going to have news, 15 minutes. Look for a buy zone. I don't think we're going to have any kind of massive sell-off, but go down to your small time frames and see if you can come in and hold 672, 673. That's going to make a great buy zone, and it'll take you all the way up the chain. Call wall 680. It's moved down from 700. Zero DTE call wall. We're above it. They're going to want to pull it back under it and then buy that option back and rotate it up. And that number is 675. Our zero DTE put wall is 666. Our put support is 645. I think it's pretty interesting that even people who know nothing really about the Bible, they're all hopped up on the 666. It's kind of crazy. All right, so here we go. That's it. I want each of you to have a magnificent day. The way you're going to have a magnificent day trading is to be centered, be focused, and watch your risk. Take care, everybody. I'll see you on the streams.